Hello, everyone, and welcome to episode 9 of None of Your Business podcast. Now, if you were an Indian, August 18th would have been a very anxious day for you. Because if you were a car owner or anyone who was related with automobiles or even your daily groceries, decisions of September 18th rather, would have impacted your lives. The whole of India was waiting with a bated breath as to whether brought under the GST tax bracket. Now, petrol and diesel are two of the most highly taxed goods in the country and brings in huge revenues to both the state and center governments. Now, why is there a demand to bring petrol and diesel under GST? Well, the rising cost of petrol and diesel has increased pressure on the government to reduce the taxes in order to rein in their prices. If you remember, the taxation of petrol and diesel in India is the highest in the world at almost 69%, only followed by countries like Italy, Germany, France, and UK at 63 and 62%. The price of petrol has risen above the psychological 100 rupee mark in almost all the major cities across the country. The government has blamed rising international crude oil prices for the rise, and India imports more than 80% of its oil supplies. And it is true that the price of crude oil in the international market does have a significant impact on domestic fuel prices. However, the taxes are also seen as a major reason behind this. Now, one thing which to be really noted is that more than half of the money paid by the consumer to purchase fuel goes towards paying taxes. Now, even when the international crude oil prices have dropped, the government does not let domestic fuel prices to drop. Instead, it increases the taxes to capture the windfall gains that could accrue to the oil companies. Now, we have had opposition parties from all across all the platforms, rather, that have demanded that the government slash taxes to make fuels more affordable. But at the end of the September 18th meeting, it was cleared out that it will not be brought into the GST brackets as of now. So for this interesting topic today, we have two personalities on our show. One is Advaith, who has been a prominent member in most of our podcasts. And for the first time, I also have my dear friend and colleague, Mr. John Mathew, who is also the exams officer at the CMI International School, joining us on this podcast. So John, let me start it off with you. You are someone who looks into economics. You're someone who looks into the environment. So how do these indirect and direct taxes compare with India, with petrol, and with the other countries?
Thank you, Joel. Before we start with the topic itself that we are presenting here today, I think I owe a big thank you to you and all the regular members of the podcast here, because I've been an avid listener, regular listener these past few weeks. And so it's indeed a great pleasure of mine to be part of it actively now. So thank you for that.
You're most welcome, John. It's actually a privilege for us to have you here. And thank you for listening to all our episodes.
Yeah, it's actually been a very nice experience listening to all of them also, from a wide variety of topics. So today, as we've looking at this issue, which is in the news or has been in the news for months now, or actually, especially in terms of the petrol and diesel prices. So as you pointed out, you were specifically looking at the taxation on it. So I just, before we get directly into the direct and indirect tax, I think we need to understand this issue before forming an opinion for it or against it. I think we really need to understand the issue in terms of the relevance it has. One, I think for the government, because of how much revenue is generated from the taxation on petrol, diesel, and natural gases. The other one, from the point of view of the consumers, especially from the common man. And in India, when we tell consumers, we have to basically look at the common man, because we have such a huge population, which is which I mean probably could be classified as a low income population. So let us just look at from the point of view of the government first. So why is this such a big issue for the government? And that also happens at two levels for India, because we have a federal state here. And so we have taxation also, which happens federally at two levels, which is at the central level and the state level. And so something like GST, the taxation happens for most GST goods. We have a taxation percentage that is the central GST, and then we have a state GST. And a percentage is decided, and that is how it is shared between the center and the states. But to understand the relevance, we actually have to look at the numbers of how much revenue we are generating from taxes, first of all. And in India, it is very poor if you compare to most of the other economies, because our tax to GDP ratio is actually quite low, which is actually like even now, I think I have maybe figures for like 2020 or 21, which I'm looking at. The GDP or tax to GDP ratio is below 20%. If you compare that with some other countries, developed European nations and all that, it is usually above 35 or close to 40% in some countries. If you look at even United States is around 25%, United States being a very low tax country generally. Even if you look at some of the other countries of even the BRICS countries like Brazil or South Africa or something, or even countries like Mexico or something, which we should might be comparing ourselves with, the tax to GDP ratio is very low in India, which means we are not having enough streams of revenue. And this is in taxes including everything. So it includes our individual taxes, which are I mean any social security or corporate taxes, property taxes, other excise and custom duties, all of this together. So this is the percentage which is quite low, which means that we usually run on a deficit almost consistently, and we are running out of other revenue streams where we can tap into more so that we can increase our revenue. So that is why one reason why it is very relevant, because the next point is basically how much of this revenue is made up or the taxation, which is itself is quite low, and around uh, 10 to 12% of that is just from petrol, diesel, and natural gas. So of all the taxes we collect, be it including income tax and any other excise duties and customs tax, sales tax, everything that we collect, out of that, petrol, diesel, and natural gas makes up for 12% alone, which actually I think is a very big chunk. So which means if you can tax petrol or diesel or natural gas more, which is going to increase the share of revenue much more. So that is why I think this is very relevant for the government to consider, because we have very few other revenue streams which you can tap into at a consistent and easy manner. Why is it easy? Because if you look at the other taxes that are being collected, be it GST on other goods, yes, there is a proper channel of collection of goods, of collection of taxes on these goods. But it is still something that can be evaded quite easily, and there is a lot of procedures which actually help companies or producers or even consumers to cut down on these payment of these taxes. Corporate taxes, similarly, we are not a country which have high corporate tax percentages, and we still want to encourage businesses and investment, and so we still keep it at a low level, and there is a limit to which how much we can increase corporate taxes. If you look at income tax number of people, if you might surprise a lot of people, we have less than 2% of the population. I think it is around close to just 1.5% of the population, the entire population, which pays income tax in our country. So one primary reason is that we do not tax at we have tax exemptions up to a very high level, like around, I think it is 5 lakhs, isn't it, Joel? I think 5 lakhs is the current slab.
Yes, 5 lakhs is the highest.
Yeah, so I think 5 lakhs is the exemption slab right now, which means that so if you look at, again, compare it with similar countries, like if you look at the per capita average income that you have from different countries right now, and you look at the percentage of tax they pay, if anyone, so let's say our country has a per capita income of $10,000, and a person earning $10,000 would be paying some tax. If you compare in some other countries, they would be paying something close like 10% or 15% of tax in those countries. Whereas in India, someone who's earning the per capita national income averaged out in India, they will not be paying any tax because it is coming below your lowest slab that is there for taxes. It is coming in an exemption slab. That is one major reason. I'm not telling we have to do anything to change that, because it is primarily because we have such a huge amount of population which can be considered as low income. So, which basically brings us to this point. The one avenue where we can easily tax more is basically the GST on or any tax, excise or any tax on petrol, diesel and natural gas, because that is an essential commodity. That is a commodity that is being brought by everyone. And so that is one avenue where we can increase our taxes, revenue on taxes from. That is also bringing us to the flip side of it, I think, because at any tax on petrol or diesel or natural gas usually has a multi-fold effect, I believe, because I think let's just look at a very simple example of a farmer who is producing some goods. He is selling it off in a market. It is being processed in some industry, and it is finally being sold in a market again where consumers are buying it. At each of those processes, right from a farmer producing it, where whatever inputs that is going into it for agriculture, for the farming itself, like for irrigation or for fertilizers or anything, the production of fertilizers, even if you have to consider that, to the transport at various places, to the storage, and finally selling it to the different channels. Each of these things needs fuel, which is a petrol, diesel, or natural gas, mostly diesel, and maybe in the processing it might involve other things also. Which means one thing that we're buying, you might actually be paying a GST on diesel, which might be a very low amount if you look at it personally. But if you look at the entire thing, I think it is come multifold effect, because you are going to pay that tax over and over and over again so many times whenever you're buying something. And that adds to the common man's woe, because any increase on taxes is going to have that of a multiple effect on a single consumer or any man or any common man, as we call it in our country. So I think that is the relevance from the government side and from a personal point of view of any person in the country. So yeah.
Yeah, absolutely. Absolutely, John. I couldn't agree with you more. When you look from an economic point of view, the 2 points which you did put up with regards to tax to GDP ratio and with regards to how much of the tax is actually collected in a country like India. Now, when you look at the tax to GDP ratio, I just found a very interesting fact which said that the World Bank has said that the minimum tax to GDP ratio which is required for any country is around 15%, which is acceptable. In India, the the gross tax to GDP ratio for the fiscal year 19-20 was 11%. And then the pandemic coming in the fiscal year 2021, it further fell to 9.9%. And we're hoping it to kind of improve to 10.2% in the current fiscal year. But that is also not because of higher tax collection, but also due to the decline in the GDP. So when you look at the tax to GDP ratio, India is far behind. And when you also look at the tax evasion, as he rightly said, only less than 2% of our incomes are actually taxed. And we go into all this by how? By falsifying records, by underreporting our income, by hiding our interests. All of this comes in, and at the end of the day, it is the fuel where the government catches hold and it affects everyone. As you said, even the farmer, to each and every individual citizen of a country is affected, because you, at the end of the day, you need to buy groceries. You, and each and every, as the fuel price increases, that cost adds up, and transportation cost increases per to each unit of that particular product and commodity, and thereby the retail price also increases. Now, all of this is an economics, but how do we see it from a layman's point of view, the ones who just see this happening? Advaith, can you just take us over with that?
Yes, I am. So let me start with the prices today of petrol and diesel. So we have petrol at rupees 102, which is at an all-time high, and we have also diesel at rupees 93.96 per liter, which is also quite high. So as we all know, like we have a lot of transportation which is required for products, and most people use diesel operated vehicles. And now we have a lot of CNG coming in because it is much cheaper than diesel. but still we use a lot of petroleum operated vehicles or automobiles. So like this causes the changes in prices of products. We have seen like an increase in the prices. So let me start by like giving an example. So we have a bottle of water of rupees 50. 20-liter package water is actually rupees 50, and now it has risen to like rupees 60 because of this change in price of the diesel. So this has affected a lot of people around the world. Even suppliers and companies are increasing prices of the products. So like this is how this has also increased the demand for EV vehicles, because of this high change in petrol and diesel rates. Yeah, a lot of people are opting EV vehicles. We have Tata bringing in more electric vehicles. Then we have new companies like Ather, and Simple One. We have also seen Ola, the cab company, bringing in bikes, which is revolutionary. So let me start by like what happens if GST is bought into petrol prices. At what rate would it be flexible? So it is said that petrol would fall to rupees 75, and diesel around 69. So that is a huge fall when we look at the prices, and this would definitely reduce the price of products. So also like Kerala has opposed this statement in like opposed this and is saying that they would lose 8,000 crore rupees annually, and uh, annually if GST is bought in petroleum products.
Right. So that's a very interesting point there. The states, out of which one was Kerala, had actually opposed this introducing the fuel rates into the GST bracket, as that would bring them a loss. What do you say about that, John? Why are most of these states against the center putting petrol and diesel under the GST bracket?
Yeah, I think that's again very interesting because the entire way GST was introduced a few years ago, one main thing that we have had an issue with is a fight between states and the center that is always expected in the federal system. But we have had a lot of back logs basically by the central government in paying out the state's share of GSTs in so many cases. So again, for most states, if you look at the petrol prices breakup, now the central taxes and the state taxes are separate now, and the state taxes are again vital for the state governments, just like how the central ones are vital for the central government. So they fear on losing out of on that if it is brought under the GST umbrella. I think the state governments, most state governments have a fear of losing out on that revenue, a consistent stream of revenue that they have right now, because they basically have to depend on this share being given out by the government, and there have been delays in it. There have been reasons that the central has given for it, but it has not been entirely satisfactory for most of the states. So I think that is one thing. Another thing, it is very hard to convince, I think, most of the electorates about this, because um, if the consumers see that the taxes that they're being paid is being inefficiently used in the country. This is not just about the taxes on petrol or diesel. Anything that is coming under the GST, a lot of resistance is faced, because if you look at some of the countries which are very high taxations, like Scandinavian countries like Denmark or something, but the taxation is very high, but there is a good implementation of social welfare schemes which actually do make up for it. Whereas if something is brought under GST like this here, and the state governments or the people in different states do not feel the benefit of that amount within their states itself, within their communities and societies, then they'll be quite reluctant to do it. So electorally also, people might not even support that idea, and that might be echoed by the state governments also. So loss of revenue and losing your uh, politics, basically. I think those are three things which I can think of right now.
True, true. At the end of the day, it all comes down to politics, and that is something really which only time will tell as to where we are moving forward. But what lies ahead? Since the revenues of both the center and the states will be heavily affected by a lower tax on petrol and diesel, as John and Advaith did say, it is unlikely that these fuels will be brought under the GST anytime soon. Even if these fuels are brought under GST, there is likely to be a steep GST rate imposed on them to prevent any kind of loss in tax revenues. And that again brings us back. The tax to GDP ratio is what is kind of governing this whole situation. So the real question at the end of the day we ask is not whether the center and the states are willing to bring fuels under the GST, but whether they truly wish to bring down the taxes on fuels. Because the share of the final price of petrol that goes from taxes has increased from 30% in 2014 to around 55% now. So, as a commoner, no further rise in fuel taxes may be the best thing that we can hope for. Thank you all for joining in for this wonderful episode. It has been really enlightening, and I have had a really great time and increasing my knowledge with two great panelists, John, Mathew, and Advaith Subash. Thank you for joining in. And to all our listeners out there, thank you for being very considerate. We have been getting your feedbacks. Just want to say that we are not recording from any studio. It's just on an open net platform. We are recording from different locations due to the pandemic. And however, we are interested to get more feedback from you. And there's an email which is mentioned in the description box. Please do send in your feedbacks. That's what keeps us going. That's what keeps the kids going and helps them to research more. And also, if you would like to join in as a guest on our podcast, we would love to have you on the show. And so please do email us if you are interested, and we'll definitely find in a slot for you. So have a great weekend ahead and have a great week ahead. And as you go in to fuel up your vehicles, do keep in mind how much tax you're paying in for it. So with that comes to an end of our show. Stay safe. See you the next time.